Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So, my dear friends, this is the 1 hour chart of gold USD in front of us. And yesterday, we discussed about three levels: 2009, then 2013 to 16, and 2019. 2019 was a weak level, and as expected it gave us a bounce of around 40 pips. But when market bounced from 2015-16 level here, honestly speaking, I was not expecting this move. In probably we were not expecting at all. When market broke 2030, it was a shock for us and we need to accept it. And right now we can see that market, after making a high of 2041, ultimately closed at 2035. So in a previous video also we discussed that if gold really wants to continue the uptrend, it will have to form a higher high with it formed it, and it gave us a confirmation that yes, market is still in uptrend. But there is one more possibility here, and that possibility is that we may see some liquidity sweep. Means after grabbing the liquidity around this place, gold may come down. So these are the two possibilities here. The first possibility is that gold is an uptrend. After forming a higher high, it will take support, it will form a higher low and bounce back again, where we can go for a buy. And the second possibility is that after grabbing all the liquidity above 20, 30, 31, 32, 35 level, market will come down again and it will act as a sideways market. So the market opening is going to be very important. Now let's try to understand the market situation. Gold gains on dollar weakness. US rate cut hopes dim. Dollar index on track for first weekly fall this year. Gold closes higher as the dollar weakens amid mixed treasury yields. Let's look at the chart of dollar. All the news are talking about dollar, and we can see that during the closing hours or before the closing hours also, okay, there was not much weakness. In fact, when I recorded the video yesterday, when we looked at the market yesterday, dollar was somewhere around here. And do we see extreme weakness on dollar? Obviously no. Yesterday we discussed pretty nicely that if dollar really wants to continue the upside, it will have to cross 104.20, and if it breaks 103.40, then it will be heading towards the next support of 103, and dollar index or DXY will no longer be in uptrend and it will just be a sideways market, or it may continue the downtrend also. Things are not very positive for dollar right now. So technically, if you look at the chart of dollar, then we do not see heavy weakness that may take gold to the high of 2041. But if we look at the chart of bonds, then we see that yes, there was a heavy fall on the chart of bonds, and this was the main reason why we saw that up move on gold yesterday. Okay, so my dear friend, on the chart of bond, we can see that it closed at the support level. So the market opening is going to be very important for the bond market as well, because if it breaks the support and starts falling, you can see that there is no immediate support. Bond market will head towards 4.180%, and we may see upside on gold again. And if the support works after a market opening, if you see market going up from here, after all, we also have the 200 moving average around this area. So if market survives, then we may see weakness on gold again. So the next move of bond market is really going to be important, because bond market closed at a very critical level, because it also looks like a bearish flag pattern. And if it is really a bearish flag pattern, then things may be very critical for gold. Means gold will be flying if bond market falls. As you guys already know, that the world's most affordable forex trading workshop is back again. It's a 3 days workshop followed by 1 month support that I conduct in both Hindi and English language. दोनों language में होता है. You will find all the details on the website. It's a 3 days workshop, and these are topics that we will be discussing during the 3 days. Keep in mind, this workshop is not for complete beginners. This workshop has been designed only for those people who have been struggling with the market, unable to make money for the last couple of months and years. I have also shared my story so that you can understand that nothing is impossible in the market. There is a questionnaire at the first so that you can understand whether the workshop will be beneficial or useful for you or not. So you must be wondering what will happen in support. So in support, okay, there will be weekly lessons, and these are the topics that we will be discussing in our weekly lessons or weekly classes. And you will be receiving regular market updates like this. You can see here, this is a March workshop, and these are the regular market updates, analysis, everything about the market, so that you stay in touch with the market, you stay ahead of the market. And we also have a Telegram community so that you can talk with other or interact with other traders. It's a colorful community. You will find traders from all around the world. You can ask questions, you can share your ideas. It's a lovely community. You can see the next workshop dates are for English classes 1, 2, and 3, first, second, and 3rd of March, and Hindi classes 9, 10, and 11th of March. And if you're unable to manage time, you don't need to worry. I record everything because people from all around the world participate, but because of time difference, sometimes they cannot attend. So I record each and every session. The classes will be conducted over Google Meet. And once you are done with the payment, okay, you need to share a screenshot to this number. Yeah, the best part is the payment. You can see here, 3 days workshop with 1 month support is only $15 or rupees 1000, and these are the benefits you will be receiving. And yeah, trading takes time. Trading is a journey. So if you're looking for longer support and personal sessions, you can also sign up for semi-annual and lifetime support. These are also very affordable. So in semi-annual, okay, apart from the Telegram community access and the WhatsApp updates and analysis, you'll also be having personal one-on-one sessions with me. You can see here, for semi-annual it's only $65 or rupees 4000 for Indians. And if you love me, if you like my work, then yeah, you can also sign up for the lifetime support. It's only rupees 8000 or only $125. Okay, hopefully, okay, it will be beneficial and useful for you. These are the payment options. So once you're done with the payment, just share a screenshot to this WhatsApp number or email here with your WhatsApp number so that I can add you to the groups immediately. Thank you so much. Okay, so this is a daily chart of gold in front of us, and on the daily we can see that we have the next big resistance, or we have strong sellers present around 2062 to 2065. This is the next best resistance on the chart of gold, the black line here. And if we look for support, then you can see the more or less the market, okay, has been choppy, so we do not have any strong support where market has tested the level many times and still we have got the buyers. But we can see that 206265 seems to be a good resistance because market has been trying to break the level, but market has failed to do so. Now let's look at the chart on our beloved hourly time frame. So on the hourly time frame, we can see that below the big resistance of 206265, we have another immediate resistance around 2048 to 2050, or you can also say 5152, the red line here. Why? Because we have been using Fibonacci here, and the Fibo is doing a very clean and neat job here. All the levels of Fibo have gave us good profit, and the next Fibo level is around 2048, and 2050 is a round number. So if we combine the Fibo 78.6 along with a round number 2050, then we can expect that as a day trader we can have some reversal. If market reverses from there, we can hit the immediate sell button immediately, and at least we can expect 40 pips. So 2048, 205051 is the next immediate resistance, but the ultimate resistance on the chart of gold at present is around 2062 to 2065. So if market reverses, we can definitely look for a sell position around these two areas. Okay. And for Monday, we have three support levels where we can look for a good bounce, and where we can look for good bounce and a buy position. Okay, the first level is around 2027. Okay, 2027, I'll be showing you. Okay, waiting. Then we have 2019. okay, 2019, and then we have around 2014. So these are the three levels or three support levels where you can look for buy on Monday. You can see 2017, this is the 2019 level, and then 2014. So precisely it starts from 201516 and ends at 2013, around 2014. Okay, now let's try to understand. So here also we will be using FIBO. Okay, but not only FIBO, you can see here. So around 2027 area, we have FIBO 23.6% retracement level. Along with that, you can expect the previous resistance here will be working as support. Plus, you can see we have the 100 moving average and the 50 moving average. So if we combine all the factors, then definitely we can expect buyers to be present around this area. Once you will see the market is showing support, you can hit the buy button. Then we have FIBO 38.2% retracement level around 2019. Previously, the level has acted as support, so yes, it should act as support, especially on Monday. Okay. Then we have FIBO 50% retracement around 2013, 2014, 15 area. Along with that, we have the 200 moving average, and the market has taken support previously. So these are the three support levels for Monday. So if you see gold coming down, we can definitely look for buy around these areas as a day trader. And if you're a swing trader, then also you can look for a buy if you want to hold your gold position for 2 days, 3 days. Okay, but if you're a swing trader, then obviously buy at retracement will be your best trading strategy. Now let's talk about the first portion of the video where we discuss that we have two possibilities. The first possibility is the market may bounce. The market is continuing the uptrend. Market will just take a dip and bounce back. And the second is market may just after grabbing some liquidity, market will be going down. Okay, so that was the confusion. Okay, that was the confusion, and obviously, okay, we do not have the 100% clear guarantee right now. There is no 100% guarantee in the market. We are simply retail traders, so we need to act according to the behavior of the market. So for that reason, you need to keep your one eye on the chart of US government bonds, because that was the main reason why market started falling. So if you see that, my dear friend, if you see that bond market is falling, because remember on the chart of bond we had a bearish flag. So if you see the market is going down again, things are serious for bond, or DXY starts falling, in that case you can look for buy at retracement. Definitely you can look for buy at retracement, because you can see the market just closed at FIBO 23.6% retracement level. Now see, I'm showing a different picture, isn't it? Now see, market closed at FIBO 23.6% retracement level. Let's assume that right after the market opening, bond market starts falling. Okay, in that case, definitely you can expect the market to bounce from FIBO 23.6 or FIBO 38.2. Okay, around these two areas, definitely you can expect the market to bounce, or you can expect the market to take a deeper retracement and bounce back. That is also a possibility. But on the other hand, if you see that right after market opening, as the bond market was already a closer support, okay, it is going up, then obviously try to avoid immediate buy at retracement. In that case, you can look for buy around the levels that I mentioned. And most of us are day traders here, so obviously your expectation, I don't think so that it will be around 150, 200 to 250 pips. So the market opening is going to be very, very important. And as I said, keep your one eye on DXY as well as the bond market, because that will be very, very important. Okay, hopefully overall you got the picture. Trading, obviously trading is not very easy. Okay, trading is not very easy. Trading is very much subjective. Okay, that is the main reason why most of the people struggle. Okay, anyways, that's all from my side, my dear friends. Thank you so much. Bye bye, take care, see ya on Monday.